Good morning, everybody. It is Monday, April 15th, 8:46 a.m., otherwise known in the United States as tax day. It's time to pay up all of that money that we worked our asses off to make. Some of it has got to go to Uncle Sam. So, today is tax day in the United States. Thank you, everybody, for being here. I hope everyone had a good weekend. Not that much happened over the weekend. Nothing that crazy. Just a few events that ended up happening. This weekend, I think I've been the laziest I've been in probably a year's worth full of weekends. I say I did nothing this weekend. If anyone feels bad for doing nothing over the weekend, just know that there's nothing more that I could have done more than you, because I did absolutely nothing this weekend. However, over the weekend on Saturday, we had some geopolitical instability. And I think that's going to frame the majority of what's happening on today. We've got to talk about Iran and Israel and what happened over the weekend. One thing I did do is I streamed on Saturday. I didn't think I was going to be streaming, but then this event went breaking, and so we had to kind of cover that live. Iran attacked Israel military bases. A lot to break down in the attack, even though it's actually not that complicated to understand what went down and the implications that it has on the market. Most people thought markets would tank on Monday. Even I thought there was a chance markets would tank. S&P's up. S&P is up. It is absolutely insane what we're seeing in the markets right now, but it also makes sense when you think about it. Tesla, 10% of employees have been fired and layoffs. I have spoken to a bunch of people that are actually similar, that are close to the situation. It's not a rumor. It is definitely true. So Tesla is laying off people. We're going to talk about that. Tesla stock down a little bit in the pre-markets. Oil prices, somehow, everyone thought the Iran instability, including myself, would jack up oil prices on Monday. Oil prices are down today. We got to talk about that. Why is that happening? Why is the Biden administration allowing Iran to continue to export oil at the tune of 1.5 million barrels a day? Well, there's a reason for that. And then Palantir launched a new deal with Hyundai Heavy Industries and Anduril, a little bit more to do with some of the defense tech world that we have, the defense tech world that's becoming more popular. So we're going to be talking about them. And then we got a bunch of other random stuff to talk about. Like right before I went live, DJT, the Trump SPAC, right now, it's down 17%. It's like, I don't know why it's down 17%. I'm going to check in a second, but that one's down as well. So we have a lot to continue to talk about today. Thank you, everybody, for being here. Let's get into it. Brent, Black Circle, Top Dasher, John Stevens, Player One, Benny, Kane Frost, Duncan, Victor. Who else we got? Vishal, Michael, good morning from Las Vegas. Good morning to you. Thank you for being here today. He said I woke up at like 3:30 a.m. waiting for the market open. I love it. Bayray, Win, Yeti, Dax, Canman, Peter, Ramu. Ramu says Robinhood does not have options for UK customers. Any thoughts? I actually spoke to Vlad about this in the interview. It's coming. I just have no idea when. ISAs are coming and the options are coming. It's just going to take some time. Not sure when, but at the end of that interview, he talks about the fact that they don't have it yet. It's more of a regulation thing, but that will be there pretty soon. Dan, Atit, Gianluca, Mr. Russo, Jittery Hobo, Colorblind Collector, Charles, Benjamin, Super Reynolds, Hegson, PC, Duvinson, Benjamin. All right. Thank you, everybody, for being here. Farshad says, when will you come to Sweden? I haven't been to Europe since 2016, so I got to do a lot of places in Europe. So we got to get that on the list. Hopefully in the summer, maybe we do a little bit of a Europe trip and we can stop by Sweden. All right, so let's get to the news. And while I'm doing this, let me know what you guys did over the weekend. Again, I did nothing over the weekend, like literally nothing. I did not. You know what I was watching last night? I logged onto Netflix for the first time in a while. They had The Matrix. I was like, I haven't seen The Matrix in like probably 15 years. The only thing I remember from that movie is red pill, blue pill. So I turned it on. It's a pretty good movie. It's not a bad movie. Keanu Reeves, pretty amazing. So I haven't finished it yet, but I was watching a little bit of it yesterday. That's how much I did nothing. I actually watched the Netflix movie yesterday. So let me know what you guys did over the weekend as well. All right, so let's start off with Iran and Israel and do a little bit of a recap of what's going on there, and then we'll keep things going from there. So over the weekend, did not know this was going to happen, but apparently the market did know this was going to happen. Iran attacked some Israel bases. Now, we actually did know this was going to happen. Biden did start sending warships to Israel in preparation for a potential Iran attack. That Iran attack did happen, but when it happened, it wasn't the type of attack that we expected. So here's like the very TLDR summary on what happened. Iran attacked Israel, and they attacked their military bases with drones and missiles. Now, Iran said the attack was incredibly successful. Israel intercepted 99% of all incoming missiles and drones, and the United States helped them as well. Israel has an Iron Dome system that is made from a majority perspective, from Raytheon Technologies, they're actually up a little bit in the pre-market. That Iron Dome has been successful for the past decade in stopping rockets from coming into Israel. Israel said they will counterstrike in 24 to 48 hours. One adjustment on that is Benjamin Netanyahu is now reportedly saying he is not going to counterstrike. Biden called him and basically said, hey, dude, just like let it go. No one died. Just like chill out. So far, Netanyahu said, okay. Now, that may change, but so far he has said, all right, we're not going to retaliate, which I think is another reason why the market's pumping right now, because if Israel retaliates, then you get to a proxy war that could potentially lead to, a quote unquote World War III. I think that's very unlikely, but that was the risk the market was thinking about. That seems to not be happening. And the U.S. said they will not support Israel in a counterstrike, which is why Benjamin Netanyahu likely said he's not going to counterstrike. That's it. That's what happened over the weekend. Those are the four things to understand. Now, why did Iran attack Israel? From what I was reading, Iran attacked Israel because of the attack on the consulate in Syria that Iran says happened because of Israel. And as a result of that, they wanted to send a message. Now, what was this message? This message, they said it was 99% successful. The attack, from what we're seeing so far and from Israel's news updates, didn't really hurt anybody in Israel from the context of a civilian perspective. It's not like Iran was necessarily aiming for like the heart of Tel Aviv. They were aiming military bases. And we found this out about 30 minutes before the first missiles landed in Israel. And so when the news found out that Iran's only doing this on military bases, immediately, I think the crypto, you could see, started to go up a little bit, because the crypto markets also realized, well, wait a second, this is kind of like an act of posturing. This isn't a full-on, like, we're about to just immediately, come for Israel. We are starting World War III. That's not what it was perceived as. And Iran then released a statement, and they said, as per the UN Charter Section 51, which is about the section around self-defense, they're saying, hey, this was justified for us to do. And they basically said, Israel, don't act up again. We won't mess with you. And if the U.S. tries to get involved, then we're going to get more severe. Again, Iran saying whatever the heck they want to say. But the attack wasn't successful in the context of Iran's perspective of actually hurting Israel. It was successful to their people in terms of them propagandizing to the Iranian public that they, did something to combat what Israel is doing in Palestine. Overall, nothing that severe happened from an attack perspective, although it was a horrific attack, and obviously everyone was very scared when it was happening. As a result of that, the market basically priced in a lot of that bad news on Friday. We see Bitcoin right here. Over the weekend, Bitcoin fell to $61,000. Let me know in the chat if anyone bought the dip. But Bitcoin did indeed fall. And, randomly at 12 p.m. on a Friday, I tweeted that when Bitcoin was at 63,000, I was like, oh, I guess there's a liquidation happening before the halving event, which is true to an extent. But also, that's when the news came out that Iran officially launched their drones. And so that's why the markets were tanking as well. Bitcoin, took a little bit of a tumble. Now Bitcoin's at 66,000. I mean, it ended up kind of recovering over the weekend as soon as they realized the Iran attack is not as serious as the markets thought it would be. S&P 500, 514. We're up 0.75% in the pre-market. Did not expect the S&P to pump. Futures opened green yesterday, and I think that told everyone, okay, market priced in the geopolitical instability. It happened on Friday. The market knew something was going to happen, and that's why we had a nasty sell-off on Friday. I mean, Robinhood, right now, Robinhood's at $17.98. It fell to $17.70 after hours, fell more than 6% on Friday. CleanSpark, $14.67. That's down in the pre-market. Tesla right now, $169. We'll talk about Tesla in a second, but the entire market took a bit of a tumble on Friday. And it seems like the reasoning was because of what was going to happen over the weekend. It happened over the weekend. The market baked in that news, and the market moved on from there. We'll talk about the Palantir deal in a second. It has to do with a company in South Korea. But those are the updates on Iran and Israel. Overall, the market seemed to have priced this in. And, you got to give it to the market. They are incredibly efficient at pricing in good news and bad news before that good news or bad news happens, which is why earnings are usually so important for companies, because a lot of times the market just doesn't know what's going to happen on earnings. Iran's attack was supposed to lead to larger oil prices. Look at oil right now. WTI, Murban, natural gas, Brent crude, all of them are down about 1%. I mean, this is pretty phenomenal to see this down. This is pretty damn phenomenal. Now, this morning, the Biden administration basically turned a blind eye to Iran kicking up their barrel production by 3 million barrels a day, exporting 1.5 million barrels a day. Could the United States theoretically stop them from exporting that many barrels with new types of sanctions? Yes. But it is reported that the Biden administration is just not going to do anything because, oil prices in the United States, in terms of gas prices at the pump, are already up 20 cents on average. And so if gas is a major part of inflation, you kind of just want to let it chill out. And Iran pumping oil This is the absurdity of like planet Earth and geopolitics. We don't want Iran to have more money because if they have more money, they will buy more weapons. They will take those weapons and then they will attack Israel, right? Like we don't want them to have money. But we also don't want Americans to be paying more for basic goods. And oil is the internal link. It is the epicenter of how we understand goods and commodities prices. So we have to let this rogue regime become more powerful with the revenue they're generating from oil just for us to not have runaway inflation. I mean, it is there's no right or wrong. It's just pure absurdity. But this is the planet we live on, and this is what we have to deal with, and this is what the things we have to reconcile. But at least today, we're seeing oil prices are down a little bit right now, which is a good thing for the broader market and for inflation to start coming down. Azim, hello from Portugal. Hello, thank you for being here today. All right, let me see who bought the Bitcoin dip. Seems like a decent amount of you bought the Bitcoin dip. Wow, not bad. I was gonna buy at 61,000 for a second, but then I was like, I don't know, and then I just didn't buy. But regardless, I mean, it seems like a lot of people took advantage of that 61, 62 dip, and now it's here at 66K right now. Okay, cool. So that is the updates on Iran and Israel. From my understanding so far, it is not affecting the markets because the markets priced it in. The reason the markets are pumping right now is because this bull market, in my opinion, has a lot of legs. It's not stopping. Earnings are about to crush. Goldman Sachs, they just crushed. And if you're not a Goldman Sachs shareholder, it doesn't matter. Goldman Sachs is one of the biggest financial companies in the world. You want them to crush. You do not want Goldman Sachs to do bad, because if they do bad, that means a lot of other companies are going to not have the finances. They're not going to have the loans. I mean, like, you need Goldman Sachs to have a great earnings. Look at these revenues, 14 billion versus 13 expected. They beat by $1 billion. EPS, they beat by almost $3, $8.79 versus $11.58 per share, up 4% after hours. And Goldman Sachs was only up 1% year to date, up 16% year over the past year. So it's a nice needed earnings pump that Goldman is getting. And companies putting up numbers like this makes me incredibly bullish for what the tech companies will do and what the other broader companies will do. We have Netflix, ASML, TSMC. We have a bunch of companies this week, United, etc. And this is a good thing for the broader market. So the final summary, Iran attacking Israel, not good from a world perspective. From an actual attack perspective, not that effective in the context of Israel. Israel seems like they're not going to respond, which is a good thing. If that's the case, oil prices are down, market's going up a little bit. Basically, the stock market's saying, hey, we priced that in. It happened. We're moving on, and we're going to keep going from there. And so that's what we got in the context of Iran and Israel. Dogecoin as well. Dogecoin is pumping. If you got the Dogecoin dip, you're up like 4 cents right now on that Dogecoin, on that dip over the weekend. All right, let's talk about Tesla. Let's talk about Tesla. Did not expect this new Tesla news. I don't know if it's bullish or bearish. I want to get the chat's perspective on if it's bullish or bearish. It seems officially true. Late last night, electric.com reported that Tesla was going to be cutting about 20% of employees. They got one part of it wrong. It's not going to be 20%. It's going to be 10%. 10% of employees. So this is what Elon says, internal memo. Over the years, we have grown rapidly with multiple factories scaling around the globe. With this rapid growth, there has been duplication of roles and job functions in certain areas. As we prepare for the company, our next phase of growth, it is extremely important to look at every aspect of the company for cost reductions and increasing productivity. As a part of this effort, we have done a thorough review of the organization and made the difficult decision to reduce our headcount by more than 10% globally. There is nothing I hate more, but it must be done. This will enable us to be lean, innovative, and hungry for the next growth phase cycle. I would like to thank everyone who's departing Tesla for their hard work. For those remaining, I would like to thank you in advance for the difficult job that remains ahead. We are developing some of the most revolutionary technologies in auto, energy, and AI. As we prepare the company for the next phase of growth, your resolve will make a huge difference in getting us there. Thanks, Elon. Now, most people are comparing this to a Meta type of move. When Meta cut about 20,000 employees when their stock was hovering around $100 to $120, and the stock has since 4x'd from then. I kind of think it's like that. The problem is Meta was trading at a PE of like 10 or 12 at that time. Tesla is trading at a PE of, I think, still 50 right now. What's Tesla's PE? Yeah, 58. Or 39 trailing 12 months. The forward PE is 58. So it's not necessarily the same move, but it is, in my opinion, kind of bullish. If you don't need 10% of employees, Tesla has 140,000 employees. Let me know in the chat. Do you think this is bullish or bearish? They're getting rid of, at that point, 14,000 people, right? So they're getting rid of a decent amount of people. I think a lot of these people, it seems like, might be admin, kind of corporate management. If it's on the actual, like, floor of the auto workers, then maybe it's bearish, right? Because that means that there's less people making cars, and technically that's bullish because they're going all in on robotaxi, right? So there's like a lot of sort of ways to analyze that, but it seems to signal that if this is corporate managers of managers, people that sit around all day and quite frankly do nothing, this is the people that Meta and Google and Discord all started firing. If those are those classic Silicon Valley tech workers that are getting paid enormous amounts to really not do much, that's probably bullish because they're saving a ton of money. If it's actual auto workers, which I would imagine 14,000 people, it has to be some of those people, production is either, I don't know, going to slow down a little bit or not be as advanced, but maybe they don't need production to be as intense, or maybe they realized, hey, we can still do the job without needing all the production or needing all these workers because our workers are already so much more efficient. Another thing that could be going on right here, someone says, in what world is that bullish? Their profits are hit bad. Well, two things. If they cut costs, EPS should go up, theoretically. The way that this hurts their profits is that they don't create enough cars, don't deliver enough cars. If they don't deliver enough cars, the lack of delivering those cars will lead into the net income, right, being lower. So you're right, that could hurt their profits from that perspective. However, and here's the angle that I thought about like 20 minutes ago, and I was like, well, wait a second. What if Optimus is getting so good? I'm just throwing it out there. This is probably like 1% probability. What if Optimus is getting so good that the bots are starting to make the cars? Again, it's probably not happening. But could you imagine, like, Elon's like, well, the bots are going to get pretty good, so we kind of don't need the people now. And then Tesla is, just using the bots to make the cars, and they're demoing it in different areas. I don't think that's the case because I don't think bots are at that level yet. I think it's going to take another 4 or 5 years for them to really be in mass level production. So I think this is more so a question of a strategic decision Tesla's making. But if it was the bots, it'd be kind of funny because that means it's already starting for it to continue to work. So we'll see. We'll see what it looks like. But that's the news that we have going on right now in the context of Tesla. Julia says demand is the problem, not the supply. I mean, that's fair. Another argument you could make from a more bearish perspective is that demand has been one of the broader issues with Tesla. We saw that they had a huge inventory increase after Q1, which kind of begs the argument, well, why are deliveries down year over year? And the reason they're down to 387 from like 450 is because there is a demand issue, and maybe cutting workers is a way for demand to reconcile the fact that demand is not as strong as it was before. That could be an argument as well. I think on Q1 earnings, which should be in 2 weeks, we're going to get a lot of information, hopefully, from the company in terms of what's going on and why they made the decisions they made. But so far, we don't have that much clarity. All of us are basically speculating. Tesla right now, 170, down about 0.5% in the pre-markets right now. Again, the fact that it's holding 170 is just incredible. On top of that, on Friday, we also had some other big news by Tesla, which was just absolutely huge that came out over the weekend. So Tesla has lowered FSD to $99 a month from $199 a month. Pretty incredible, right? $99 from $199. We'll talk about the Palantir deal in just 2 seconds. This to me is also very bullish. I think most people understand that it's going to increase adoption, leading to billions of more miles driven using FSD, which should fuel Tesla's data advantage for building out robotaxis. Now, not Ross Gerber, Gary Black doesn't exactly have the same take as most Tesla bulls. He quote tweeted one of my tweets and he said this right here. So where's Gary? He said, so I said, one thing is certain, if Tesla does run to $200, the FOMO will be something like something we've never seen, right? So I don't think Tesla's going to do $200 anytime soon, but let's say it runs somehow. I think people will think they're missing out on the greatest AI play of the century if FSD is becoming as big as it's getting, especially because the take rate's going to increase as the price has gone cut in half. And Elon Musk is finding a way to make everyone remember why Tesla's not just a car company. Gary Black says, I've been saying this for months. Until FSD is 99.9% intervention free and Tesla assumes liability for injury or damage, investors will add little or no incremental value to Tesla's supervised FSD. So he's saying the street doesn't give a shit about FSD until it's perfect. Most of us already assume in our earnings forecast and valuation a 10 to 15% Tesla FSD take rate on current and past deliveries. At $99 a month, this adds about 11 cents a share, which would equal... then he just shows the math for how he gets to 11 cents a share. While the following statement should be obvious, I'm taking no chances. If Tesla cuts the FSD price in half and gets double the take rate, so that would be about 30% take rate versus 15, there's no incremental EPS update, although more data could lead to greater FSD efficiency, which could accelerate robotaxi progress. So from from Gary's perspective, he's like, look, even if FSD is cut in half, he wants it to be $59 a month, by the way. So he wants it to be cut, more, almost like 60, 70%. But even if it's cut in half, that is going to increase take rate by double, but that is not going to have an incremental EPS update. It's going to be another 11 cents a share, which would be 22 cents, which is just like not going to move the needle. So it will make robo-taxis more likely because they'll have more data because more cars will be running on the streets with FSD, but it's not going to necessarily impact their earnings. I mean, I guess we'll see. And look, you can't necessarily say he's going to be wrong because the stock has been in the gutter and we all know Q1's not going to go really well. My question is, can it maintain this 170 range? Because if it maintains the 170 range and doesn't drop down all the way to the 150s, 140s that many of the bearish analysts are kind of expecting, Gary Black reduced 10% of his Tesla holdings because he's expecting around that range, then that is incredibly bullish for Tesla. I mean, for them to hold 170, even in the face of everything they're going through, is pretty exciting as well. So it's going to be interesting to see how that plays out. Colin says, hi, Amit. It's amazing to see how the naysayers are so heated to say that Tesla will drop when they know it will just rise later. Lots of short-sighted people. I do think the naysayers have a strong economic argument in the context of the financials because we know Q1's not going to be good. But long-term, we know what's going to happen with Tesla. I mean, Tesla reducing that price from $199 to $99 basically is telling the market, hey, we think people will pay a certain price point for this, and we think that price point's going to be a decent amount. That's basically 95% margin Tesla has on that $99 that they pay a month. And the cars we could lose money on the cars. We're going to be making 80 to 90% margins on FSD because it's a software business. And you're going to have to start giving us more of a SaaS multiple over the long term. I don't think any other company on the planet has the ability to do what Tesla's doing from that perspective. But in the short term, I think we all know it's going to be a little ugly for Tesla. Or maybe it doesn't get that ugly because it's been ugly, down 30% year to date. And maybe 170 is where the pain ends, right? And so we'll see how that plays out. Pan says, and all of us who paid $15K for FSD to help Tesla, are we stupid? Yeah, I don't know about that answer. I mean, that question is really interesting. I would hope Elon would retroactively actually help or give a refund to the people who paid that much for FSD, because that is a slap in the face if you paid $15,000, $20,000 for FSD and it costs $6,000 right now. That's just not. I mean, that's pretty sad. So I hope Elon does something about that. In reality, because their financials are struggling a little bit, they're probably not going to do that. But if that were to happen, it would be interesting to see how that plays out. I do know a lot of people over the weekend were saying they feel like it's like the student loan thing, right? Like if your student loans got canceled, but you paid yours back, wouldn't necessarily feel the best. All right, let's get an update here on Tesla as well, and then we'll move on to the Palantir deal.
The tech sector right now. Our next guest says that from the Magnificent Seven, six are still magnificent. Joining us now, Doug Clinton, Deepwater Asset Management managing partner and co-founder. Doug, can we assume, is Tesla the one that got booted out?
It is. I mean, just Mike, when you think the news couldn't get any worse for Tesla, we have EV demand questions that have been popping up over the last few quarters. We have questions now about whether they're going to build the low-cost Model 2, price cuts on FSD. I think that investors are still questioning now, is Tesla still one of the Magnificent Seven? For us, I think it's clear there's six that are incredible companies. I think Tesla is still a really great company, but it's the one now that has the most to prove.
The six that do remain, for the most part, are being animated, maybe with the exclusion of Amazon and Apple, by the AI excitement. Is that correct? Obviously, there's been some break in momentum in things like Apple, but what would you right now at today's prices prefer to emphasize in terms of these names?
I think one thing that struck me this weekend, we think about the global conflict that we're dealing with, something we were saying last October when we were concerned more in the markets about rising rates, is all these names, all six names, are in a way both offensive and defensive. And that's the thing that we think a lot about when we try to position our portfolios with the Mag 6. I think these stocks are offensive because, to your point, most of them do have AI exposure. They all have pretty great growth profiles, but they're also defensive because they have fortress balance sheets and because they generally sell products that I think would be well positioned to weather any sort of economic issues. So I think that's the way that we should be thinking about these stocks. They aren't trading at egregious multiples, despite what I think some other investors might think, given the moves they've had. The group trades about 30 times forward earnings. The peak of the last 10 years, 38. The trough is 20. Are they cheap? No, but are they egregiously expensive? I don't think they are that either.
And so that point that he's making right there, I think is why these companies are going to crush on earnings. I think these companies are going to put up some good numbers, even though Amazon up 23% year to date, Meta up 50% year to date, Google, I think up about 12, 13% year to date. I think they're going to put up numbers. Market's going to realize, small caps, not the best place to put our money. The broadening out of that rally needs rate cuts to happen. Rate cuts might not happen until September, October. If that's the case, where else do you put your money? You either put it in a money market fund or you put it in the big seven. And I think the big seven, especially Tesla, I think is going to get some of that capital because they are down 30% year to date. They're not the cheapest out of the big seven, but they are down the most this year. On top of that, money market funds decreased by 30 billion last week. So we saw those money markets come down 30.98 billion. Some of that money probably went into the markets as well over the last 5-6 days. All right, let's move on to the Palantir deal. So let's talk about Palantir. The conclusion on Tesla is that we'll see how the market reacts when it opens for the rate cuts. But so far, or not the rate cuts, the job cuts. Wish there were rate cuts. But as of now, market relatively doesn't care. It's down 0.54%. Tesla FSD news was really, really big for the company. And if take rate goes up, employees come down, costs go down, subscriptions come in for software services, which is, very high margin. You could see Tesla in the next few quarters potentially put up some better earnings that they're going to put up in Q1 and maybe not get punished as harshly on Q1 as the street thought they were going to be punished. Okay, here we go. Palantir. So some breaking news. Garcia posted this over the weekend, and I thought this was really interesting. HD Hyundai and Palantir are developing unmanned surface vehicles to replace manned ships. So if you don't know what HD Hyundai is, they're a company in South Korea that Palantir has had a $45 million deal with over the past 5 years in regards to shipyard manufacturing. So they manufacture ships and they do a variety of different things in terms of subsidiary sectors to be able to work with the process of building ships. HD Hyundai signed a memorandum of understanding with Palantir Technologies, an American-based AI data analysis company, to develop an unmanned surface vehicle. The two companies plan to develop reconnaissance, I'm sorry, I'm saying that wrong, USVs by 2026 and then expand to combat USV development. The goal is to develop a differentiated model that overcomes the limitations of existing USVs by combining HD Hyundai's autonomous navigation technology and Palantir's AI technology. The HHI was responsible for full development and equipment system integration, and Palantir was responsible for AI-based mission system automation technology. Through this cooperation, both companies aim to secure competitiveness in the unmanned ship market that will lead future naval warfare. So this is also really interesting. Now, Anduril is also working with HHI in an interesting way. So HD Hyundai and Anduril Industries announced strategic partnership on maritime systems, autonomy, and mass manufacturing. This deal came out on the 13th as well. So we're seeing Anduril's Lattice software platform that we've talked about for a while. Palantir builds on top of that as well. And HD Hyundai basically embracing the entire defense tech landscape as they've worked with Palantir for the past 4 or 5 years. Now they're working with them in the context of unsupervised or unmanned surface vehicles, which I don't exactly know what unmanned surface vehicles is. I mean, let's Google it right now, but I know it has to deal with naval warfare. And yeah, if we look at this right here, an unmanned surface vehicle or uncrewed surface vehicle, colloquially called a drone boat or drone ship or a sea drone, is a boat or ship that operates on the surface of the water without a crew. Pretty self-explanatory. And so I think imagining there would be a lot of AI data integration for that to actually happen is probably important to kind of see. And now the cool thing about HHI is, again, they're very big in the shipyard manufacturing niche. $45 million extension with Palantir that they signed back in September 2022. So I would imagine this deal is good for Palantir and would be important for them over the long term. Now, in the context of Palantir's stock price, didn't really move based on this deal, and we didn't get any details on the deal in terms of actual numbers, so I wouldn't expect them to move. The one thing to understand, I think, for shareholders right now, Palantir is up about 0.13%, 3 cents in the pre-market, is that day after day, week after week, we are continuing to see defense contracts given to this company in a way that the market's not necessarily pricing in, I would argue, and in a way that seems to be them setting up what the next 10 years are going to look like. Given what happened with Iran and Israel, it seems more than likely that the next 10 years are going to be geopolitically turbulent versus a kumbaya. If that is the case, and Palantir is working on unmanned crew vehicles on the sea. And they're working on the Titan contract. They had an electromagnetic contract they just got for $10 million from the United States to operate in different sort of kinetic warfares. Then they got another contract from the Defense Innovation Unit 2 weeks ago, where they're partnering with Anduril to build a different operating system for the DoD. I mean, the stuff that they're doing across the world. Now, Germany wants them back. We covered that on the channel. They want Palantir back after a few years of rejecting them because terrorist threats are getting higher and they need some type of software to detect these terrorist threats before they happen. I just don't see how the defense business fails over the next decade, and it likely is going to get better and better. LMT, Lockheed Martin, is up 1.59% in the pre-market. The perception is Lockheed Martin and Raytheon, one of the main builders of the Iron Dome in Israel, Raytheon also up 1.27%, are going to get more money from what's going on with Iran, Israel. Now, so far, Israel hasn't retaliated. So if Israel's not retaliating, maybe that is a good thing. I mean, obviously, that's a good thing for now. And maybe that's not necessarily the most bullish for LMT and Raytheon because there's not a huge amount of money that they're going to get overnight. But the perception that they need to be more secure could lead to Raytheon, LMT, and Palantir, for that matter, to be able to generate a little bit more revenue from some more contracts. Big Daddy Tomcat says basically South Korea seen what Palantir did with Ukraine's sea drone success against Russia. That's definitely one argument. The other thing is HHI is a private company that's in South Korea, and they've already been working to make essentially I'm trying to think of the name. There was an operating system that Palantir built for electric vehicles. We haven't heard too much about it, but it was a combination they did with one of their SPAC partners, Wejo, where they built like an EV charging station operating system. And they built a variety of those over the past couple of years. I think what Hyundai wants them to be able to build, which they've already done, but wants to take us to the next level, is a shipyard manufacturing operating system in totality. And that involves not just the commercial sector, which is what the majority of their deal was focused on over the past 5 years, but also the defense sector. And as a result of that kind of operating system for industry, this is what I was looking for, Skywise. So Skywise is, the airline sector of Palantir's Foundry in its full effect. HHI likely wants that to be for the shipyard industry. And that is the reason for why they're starting this in a more sophisticated way. So this is the partnership from 2022 for those that never saw it. Palantir Technologies and HHI Group grow partnership to $45 million with expansion into shipbuilding. Teams across the shipbuilding subsidiaries will use Foundry to help them make better data-driven decisions. During the successful pilot phase, shipbuilding teams use Foundry to improve architectural design of ships, ensure quality on production lines, and bring the power of big data analysis to standard safety procedures. And this was another $20 million extension over the course of 5 years. It just seems like Palantir has their fingers in a lot of different elements around the defense space and particularly around the defense combat space. And this deal they got over the weekend is signaling that this will continue to happen. Karp said back in 2022, HHI is an industrial leader working at the leading edge of some of the most complex engineering challenges that we collectively face. We could not be more enthusiastic about expanding our partnership and actively working to extend across to our software across HHI's operation, as well as the country's commercial and government sector. That government sector, we're finally seeing a piece of news today of that affecting the government sector in terms of naval warfare for HHI. So really good. Not bad. Not bad at all for Palantir. Now, a lot of people have been asking over the weekend, well, what does this mean for Palantir in the context of the Israel attack? I definitely believe that Palantir played a role in helping Israel over the weekend. We know that their software has been in high demand in Israel after the Hamas attacks. We know that Karp went to Israel with Peter Thiel. It's the first time Thiel and Karp have sat together, at least publicly, in a long time. And they were basically just saying, hey, we want Israel to win. One of the reasons they want Israel to win is because they believe in Western democracy. And as you can critique Israel for a million things, but one thing you can, give them a little bit of an edge on, maybe more than a little bit of an edge, is that Israel is one of the broader democracies in the Middle East versus some of the other countries. And so they're going to stay on the side of democracy and they're going to support them. I would imagine that when those drones left Iran, Gotham was loaded up. Gotham was probably loaded up multiple days before, and they knew this was coming. This is the other reason Iran's attack was so not, special, the way they tried to proclaim to their citizens that they attacked Israel. They told Israel about 7 hours before they launched the drones that, hey, we sent an attack. It's not like Israel had to use special software to figure this stuff out. They probably used that software in trying to stop those and intercept those missiles and find those missiles right before they got into their airspace, which Israel was able to do for about 100 of those. But they knew. Iran told them. They gave them a warning. And so when Iran gives you a warning that these attacks are going to happen, that's how you know Iran wasn't really trying to have some spectacular attack. I would imagine Palantir was involved in all parts of the weekend, and that only proved their importance is deeper in the context of Israel as well. Michael Schaefer says, I remember the good old days when enemies didn't announce their attacks hours beforehand. Yeah, and again, it's all posturing. That's why I think the market's up right now, because the market's basically saying, well, wait a second. Why? Like, why do we think, why should this be World War III, right? Like, why should we get super scared when Iran is telling us what's going to, like, it's just a very hard thing to analyze in the context of this being some horrific attack that's going to lead to a really, really bad war. So far, attack was not too bad on Israel, at least, and we're going to see how this plays out over the coming weeks. Let's get an update on markets real quick, and then we'll hear from Dan Ives and see what's on as well. So here we go. We got S&P that's up right now in the pre-markets. Again, incredible stuff from the S&P. Palantir's up just a little bit. S&P right here, 515. The S&P was 510, dude. This thing has not fallen 2% in the past, I think, 6 months. It has not had a 2% down day. Even on Friday, it was down 1.38%. The bears are hungry for a 2% down day on Palantir, and that's just not happening yet. Bitcoin right here, 66,000. Hong Kong ETFs officially have been approved for Bitcoin. I'll talk about that more in a second. It's not like it's approved, but the SEC of Hong Kong did not make a statement yet, and everyone's waiting for their statement. The people who submitted the application said that they were approved, and so they announced, hey, we got approved, but the SEC of Hong Kong did not make the announcement, kind of like when Gary Gensler's Twitter account got hacked back in January when the Bitcoin ETFs in America were approved. So we're waiting on that official announcement, and that's why I think Bitcoin hasn't had a super big pump yet. It's up 1.44%, but let's assume Hong Kong's ETFs were approved. Yeah, there's going to be a lot more money coming into Bitcoin. Bitcoin halving in about 5 days is going to be really interesting to see how that plays out. Reddit up a little bit. Trump's down 11% in the pre-markets. I don't know why. I have to check right now, but if anyone knows why, let me know in the chat. But it sold off in the pre-market. Something must be happening, but that is down 11%. I do think he has a court hearing today, and maybe some news leaked from that court hearing that's not good for Trump, and that's why it's down. But that is also down. Google's up 1%. Meta's up 1%. Rivian's up a little bit. Rivian had a nasty fall on Friday and Thursday, falling about 10% over the past week. TFC, Regional Bank, $37. Verizon is up a little bit, $39.88. CleanSpark right now down about 0.74%. Robinhood, $18.07 in the pre-market. And then again, Google here, 161, close to an all-time high in the pre-markets as well. They're issuing 21 million shares. Oh, wow. Really? DJT, 21 million shares. Wow. Yup. There you go. There you go. Dilution, baby. That's what we got. Thank you for that, Mark. Dilution. Trump media shares plunge after company files to issue additional DJT stock. There you go. So they've issued, Mark's saying about 21 million shares. It seems like they've issued a decent amount of shares. Again, when a company issues shares, you own less of the company. Stocks tends to sell off when that occurs. So there you go. DJT down 17%. Right now it's down about 15% on that news. All right, let's hear from Dan Ives, get his perspective as well, and see what he thinks is going to happen as we start one of the bigger weeks for earnings. Is starting today, basically.
Going to be a turnaround for the ages for cybersecurity, Zscaler, CrowdStrike. We're actually strong buyers of Palo Alto here in terms of the transformation they're making. And right now, I think this is going to be one of the biggest subsectors of tech, especially as you have all.
But what are you seeing that the market's not seeing, Dan?
Because everyone's taking what happened with Palo as ultimately just the start of a shot across the bow negative. We see the opposite, which is why right now, Frank, this is a pound the table time on cybersecurity, in our opinion, and that's how we're hand-holding investors through it.
All right, so you're hand-holding investors through it. Steph, I want to come back to you. Something you've been looking at is the money and money market funds. Right now, according to ICI, there's about $6 trillion in there, but in April, about $31 billion came out of those money market funds. How do you see that impacting tech investing, but just the markets overall?
You know what's interesting, Frank, is Larry Fink of BlackRock on Friday said that there was $9 trillion in money market numbers. So he must have the most updated figures, because I actually also thought it was about $6 trillion. Well, it doesn't even matter, 6 or 9. There's a heck of a lot of money on the sidelines. That, okay, I get it. It's getting 4 or 5% in interest, so you can sleep well at night. But you're going to get much more in terms of total returns in the S&P 500. And that's actually also what Schwab, their management team, has said. They look at cash balances on a month-to-month basis, and those numbers have been coming out of money markets and cash on the sidelines going into the S&P 500 because there's this fear of missing out. And if I'm right, and we have better than expected earnings, and we have a broadening out in earnings, that's all the more reason why you do want to be buying in on these dips.
I think she's right, dude. I think I listened to a couple of fund managers' notes this morning, and all of them are saying they're buying this dip. And I think the reason they're saying that is because you cannot have your money collecting 5% when Meta's compounding at 25% off of a $130 billion year that they just had last year. It's an election year. Inflation is sticky, which is the hardest thing to accept in this whole bull case narrative, but it will come down, and companies are going to put up phenomenal earnings, which is why I also think this is absolutely a buy the dip moment. Could it get worse? Yes. But dude, it's so funny. Like, Iran attacks Israel, market sells off pretty aggressively on Friday, and you see like all this turmoil. Bitcoin drops 7% in a few hours. And then within a day, within 24 hours, futures open green. The market says, all right, we had enough of that. Let's move back on. I think it's just going to take a lot. It's just going to take a lot for the market to really, really decide, to get the S&P back down to 4,700, 4,600, what the bears are expecting. And now if you're bearish, the hard part for me to sort of accept, and I listen to the bear theses every day to try to get a perspective on this, I don't know what is the broader bear case on the market. I really am not sure what is the argument. It's not company earnings. We know that. You can't say valuations are egregious, as we had one of the people say in the beginning of the market open. The Mag 7 trades at 30 times forward earnings. Is that cheap? No. Is that like 70 times like it was back in 2021? No. And so, I mean, there's just so many different factors here to say what is if you say inflation is your bear narrative, I'll give you that. But I think if the data shows inflation is coming down, then that's going to be a hard bear narrative to rest on over the coming year, which is hard to sort of reconcile in a meaningful way. Another reason why the market's selling off, as someone's saying in the chat right here, you got to pay your taxes. I think a lot of people sold some stock to pay for their taxes, right? Like, I've definitely not been buying. I told you guys last week, I have not been buying at all. I've been buying like, I put in like $200 into Robinhood and Palantir in terms of the dip last week. I bought a couple of shares of each, but I don't have any money. I just paid my taxes. I paid my tax guy yesterday, or I paid the IRS. I pay New Jersey state taxes. Like, I don't have money, dude. So a lot of people also might just not, it might take a couple months before fresh money comes in. But people paying their taxes is another reason why we have a little bit of the sell-off. JP Morgan CEO Jamie Dimon said AI may be as transformational as the steam engine. Now, Jamie Dimon released a shareholder letter on Wednesday last week that was pretty bearish about like the geopolitical landscape, inflation, etc. For him to say, hey, AI might be as transformational as the steam engine, the reason people take that seriously is because Jamie Dimon is going to be giving the capital financing for a lot of companies that go public in the AI space, and for a lot of growth stage capital that need more money to be able to eventually go public. So the CEO of JP Morgan, one of the biggest banks in the world, she should believe that AI is transformational because he's going to be financing a lot of these AI projects. And again, when people see these types of statements, they tend to believe that AI is going to be more important than a lot of people think it is. And I think the company numbers are going to reflect that. One quick thing before we get into the market open, this right here was a big blow to Humane. Remember that AI pin that we talked about, or that people have probably seen? Marcus Brownlee, we'll talk more about this after the market open. He says this is the worst product he's ever reviewed, ever. He said this is the worst product he's ever reviewed, ever. So although AI is transformational, some of these companies trying to replace the iPhone by putting on a pin, as you can see right here, that's the AI pin on his shirt, using AI. It's so funny because I've been saying I think this thing is really stupid, and this is the biggest. He has 18 million subscribers, dude. For this guy to say that this is useless, I mean, dude, that's a big blow to your company if that guy just says it's not a good product. So we'll talk more about that after the market open. I want to give some thoughts on that, but not everything in AI is transformational, but a lot of it is going to be. And if that's the case, I think company earnings should do pretty well. 9:30 a.m. Monday, April 15th. Thank you everybody for being here. The stock market is now open. Wake your ass up. Here we go. Google opens up 159.84. Not bad at all for Google. Google, again, took a rough hit at the beginning of this year, and really for the far majority of this year at 130, now breaking out into that 159 level. S&P 500 up 0.75%. Let's freaking go, baby. S&P recovering just a little bit from last week, but nice to see it not selling off. And the fact that it's not selling off means the market is ready to buy the freaking dip. And that's what we're seeing right now. Palantir, 2287. Look at that. Maybe makes a run at 23. Nice big green candle right there. 23 has been a tough resistance for Palantir for the past 2 weeks. But let's see if it can get there. Lockheed Martin is up 2%. Raytheon up about 2%. Kind of expected that to happen. Bitcoin, 66,200 right now. In the context of Bitcoin, Google again, 159. Apple down a little bit. Apple down almost 1%, 175. Apple had a nice run last week. A run that I think, quite frankly, was not really justified. But they needed some good news. They got some good news with the M4 chips in the market, started buying up the stock. But Apple right here at 175 down to almost 1%. SoFi, 732, basically flat on the day. We'll see how SoFi opens up later. They do have earnings in a couple of weeks. And we'll see how that plays out. Robinhood, let's take a look at these guys. 1814, not bad. Up 1% on the day. Again, the Robinhood dip under 18. It is becoming very hard to buy. Let me know if anyone got shares at 17. But it's getting tougher and tougher to buy this dip under 17 because the market seems to eat it as soon as we get to those levels. Open Door up about 0.6%. Verizon up about 0.81. What else do we have? Boeing, 0.75. That's at 170. Boeing was 191 3 weeks ago. Boeing now at 170. So definitely the stock has taken a little bit of a haircut over the past few weeks. MicroStrategy down 0.66%. Again, this thing would be down a lot more if Bitcoin was at those $61,000 levels that it hit over the weekend, but Bitcoin rebounded pretty nicely. And so not up too dramatically in the context of or up decently over the weekend, not down as dramatically as the market thought it would be. Tesla opens down 1.34%. So far, the market's taking the 10% layoffs as kind of bearish, and the FSD subscription going from 199 to 99, not being able to pump the stock right now. Tesla here at 168, not as tough. Robinhood 1810 right now. S&P 500 514.64. That's what you got on the S&P 500. Palantir 2293, trying to get to that $23 level. Let's look at the Max 7. Where's NVIDIA? Wow, NVIDIA 891. NVIDIA at 891. Incredible. NVIDIA's not stopping. NVIDIA went to 838 over the weekend or on Friday. Now here at 891. Amazon 186, Google 160, Meta 516, Microsoft 425. And then Apple right here, 174, and Tesla are down. So Apple and Tesla down. The rest of these guys are up. Apple and Tesla both down for the year and down a little bit more today as well. Crypto stocks. So Coinbase is green. CleanSpark is green. Bitcoin, again, turning a little bit more green from yesterday. Marathon is up a little bit. Hut 8 Mining is up. Iran is up. Cypher is up. MicroStrategy is the only one that's down. Bitfarms is up. Robinhood is up. And Coinbase are up 1.19%. on the day. Bitcoin, again, from 61 to 66. That was a big deal for Bitcoin, and that helped the broader crypto stocks recover. ASML has earnings this week, so we're going to hear from them. They're up 2%. SMCI up about 1%. AMD down about 0.52. NVIDIA up 0.73. Taiwan Semi, they also have earnings this week. They're up 1.38. Avgo, or Broadcom, 1.19. Qualcomm, 1.49. And then Intel getting a much-needed bounce. Intel fell almost 15% last week, so nice to see Intel get a little bit of a bump, up 1.47%. Celsius, let's take a look at Celsius. Celsius is down. Wow. 1.78. Interesting. Celsius peaked at almost 100 3 weeks ago. Then they had that new Pepsi reorganization of their deal, and that sent the stock down about 7%. So Celsius not really recovering since then. That one is down. MPW Medical Prop. This thing is up 28%. This looks like a penny stock. I don't know why it's up 28%, but maybe some news came out today that got it excited. 10 years at 4.6. Very interesting. The market's rallying with 10-year at 4.6. S&P up 1%. What else do we have here? Goldman Sachs. Look at these guys, up 5.6%. Again, even if you don't own Goldman Sachs, you want these companies to have just great earnings, because that means the broader financial sector is okay. JPM had not a horrible earnings, I would say, but their net interest income wasn't as good as the market expected. They're bouncing up 2% today. They were down 6% on Friday. But overall, they beat on revenue. They beat on EPS. Same thing with Goldman. They beat on EPS by $2. They beat on revenue by $1 billion. So, I mean, they had a really good earnings. They should be getting rewarded, and they're getting rewarded right now. Robinhood, 1820, up 1.25%. Palantir, 3 cents away from $23. For those that are just joining, Palantir signed a new deal with Hyundai Industries over the weekend. They're a shipyard manufacturing company in South Korea. They signed a new deal for a defense contract to build uncrewed manned vehicles in the context of naval warfare, which is very bullish for their overall prospects in South Korea. No details on the deal. I don't think that's the reason it's pumping. I think this is more of just a macro pump, but really good deal over the weekend for Palantir to be able to sign. CleanSpark up about 3% right now, and then Tesla here 168 down about 1.2% on the day. Can you talk about retail sales and what that means for the market? Okay, so let's look at retail sales. Retail sales were out today, and I believe they were down a little bit. Oh, retail sales, sorry, they jumped 0.7% month over month in March. Okay, so that's technically a good thing. Why is that a good thing? Retail sales, your Lowe's, your Macy's, your AutoZone, your Target, your Walmart, all these companies submit data every single month to be able to determine how much their sales are going up or down. And if retail sales on aggregate are up 0.7% month over month, it's actually similar to the ISM data we got last week. Manufacturing in the United States is expanding. It came in lower than expected. We expected 58. It came in at 53, but above 50 means we're expanding, not contracting. So the fact that we are overall as an economy expanding, you would imagine retail sales start to go up. That's good because it means the consumer has money. I have yet to see an argument. I've seen a lot of people say credit card debt is going up. I've seen a lot of people say, that Americans don't have a ton of savings. For some reason, people are spending. People are spending money. The money is going into the economy. They're buying up shit from Walmart and Target. Like, people are spending. And if retail sales are going up, it's very bullish for the broader market in terms of spend. Walmart right here up about 0.5%. It's at $60 right now. Target is 167. They're up 1% on the day as well. Pretty green day we're looking at. NEO, I don't know what's going on with NEO, but NEO's been hammered. If you have NEO, it's not been pretty. It's down like 10% over the past 2 weeks. So yeah, NEO has not been in the best situation. Again, all EV companies not necessarily in the best situation right now. So NEO right here down another 0.73% on the day. AMD at 160 down about 2% right now as well. HIMS is under 1380. Okay, why is HIMS falling? I don't know, but HIMS right here 1397. It was 15 2 weeks ago. It was 1430 last week. Now it's at 1399. I have yet to conclude if HIMS is a super big buy the dip opportunity. What I do think is that HIMS is growing, and I think they're going to, because they're profitable, they're going to continue to be profitable. The stock is up a lot. It's up 60% year to date. I don't know if the market's ready to give it even more of a premium. And I also don't know if the catalysts are there to get it more of a premium outside of just continuing to grow. But if you have HIMS and you have a cheap average, I think averaging up is not the craziest thing in the world. Initiating a position at 14, I don't know. I don't know enough about the financials yet to think that's like the smartest thing to do. But that one is up right now here at 14 bucks. Quarantine Quartet says, how are retail sales up with all of the retail theft and store closures that we've seen? It's a good question. Dollar Tree has closed down a bunch of locations. Obviously, we've seen Target basically lock down like basic things you want to buy in Target. Like if you want to buy some condoms at Target, you got to like ask somebody to like open the door. Don't ask me how I know that, but like still like, the basic things they've locked down in Target and Walgreens and Walmart and all that stuff. But still, that's my point, right? If retail sales are up, people still have money. People are ready to buy regardless, which is just hilarious because money's there. And if money is there, then that's pretty interesting to see how that money is going to ultimately be trickling into a lot of these companies' earnings over the coming weeks. We already saw this. Let me move on to this right here. I want to pull up a couple of things here and go here. Okay, so here's the Hong Kong news. Let's cover this real quick, and then we'll keep going from there. Bay Ray says, "Amit heard about the news from a friend." You guys are funny. Okay, so Hong Kong and Bitcoin. So Bloomberg reporting Hong Kong is likely going to approve the Bitcoin ETFs as soon as Monday, and it seems like they are approved. So Bloomberg said Hong Kong may approve exchange-traded funds investing directly into both Bitcoin and Ether, two dominant cryptocurrencies, over the weekend. And it seems like that has already happened. So if you look at this right here, Hong Kong regulators approve launch of spot Bitcoin and Ether ETFs. Hong Kong regulators on Monday approved the launch of the Bitcoin and Ether ETFs. China, AMC, Harvest Global, and Bosera International are among those that have been given the green lights to issue the ETFs. Crypto trading is effectively banned in mainland China after a massive crackdown in 2021. However, Hong Kong has slowly been trying to make itself a regulated crypto hub. Now, what's going to be interesting is if China tries to crack down on Hong Kong becoming a crypto hub, Dubai and Singapore are seeming like the next countries that are up to try to do this after Hong Kong. I don't think China's going to mess with Hong Kong because China already has their own shit going on. Like they need to solve their real estate problems. And quite frankly, if people can invest in Bitcoin over real estate, like I don't know why China is not, I mean, I know why China is not approving Bitcoin because it takes away control from the government. But if people in China could invest in Bitcoin over real estate, A, Bitcoin would explode. B, China could buy up a bunch of Bitcoin and like pump it themselves. And then C, people in China wouldn't be as poor as they are right now because the majority of the middle class's net worth is in real estate, and real estate is not doing well in China. So it would be a good thing for them to do that. They're probably not going to do that. But in Hong Kong, at least we're seeing it. Now, look, the Hong Kong CFC or SFC, which is the SEC, has not immediately made a comment, but the asset managers have received the green light. At least they reported this morning, which is obviously very good for Hong Kong and good for Bitcoin in general. So we'll see how that plays out. Palantir, $23. Not bad. Robinhood, $18.20. Palantir, $23.03. Again, Palantir facing a lot of resistance at that 23.0 level, but it's still maintaining some momentum here, and it keeps getting there even if it falls back down. Apple at 174, Intel 36, SoFi up almost 1%, PayPal 65.25, Amazon, wow, Amazon pretty much back to all-time highs. Amazon pumping a little bit today. Google at 157, and then Meta here at 516. Now, what companies have earnings this week? Let's talk a little bit about that. There's 5 earnings that I'm looking forward to the most this week. I'll be covering all of them live every single day on this channel. I don't think there's any after hours today, but basically the market close every single day is going to extend to like 6 o'clock now because we're going to be listening to a ton of earnings. So you guys will be stuck with me every single day till 6. So these are the earnings I'm looking at. DNA, you guys said look at DNA. What's going on with DNA? Wow, DNA is below $1. Oh my, let's look at that real quick. DNA is below $1. Wow. Brandon says, what do you think if banks have to tighten lending? They've already tightened lending. Banks have already been pretty loose with their lending. So I don't think that's going to be the biggest issue. The thing about Goldman Sachs and their earnings doing well is that their lending likely has gone up for them to meet those revenue numbers, or their asset management has went up. I'm going to check when I dive deep into their financials, but I think lending is already tight. The point is they're lending more effectively, and that's why we're seeing broader stability in the banking sector right now. DNA, and remember, we got rid of Silicon Valley, Credit Suisse. We got rid of a lot of the bad actors, and so hopefully we got rid of a lot of froth in the system. DNA is below $1. Cathie Wood has 200 million shares of this company. This is down 5% on the day. This is really tough to see. I like DNA as a company. Synthetic biology, I think, is incredibly interesting. I've studied the company pretty in depth over the past couple of years. I got interested in them in 2022. But the problem is the insiders were selling so much, and it was becoming like disgusting, the amount of selling they were doing. Obviously, they were using the public markets as exit liquidity. That's what it looked like to me. And market cap is still $2 billion for a company that's maybe going to do a couple $100 million in revenue. I think the multiple is still ridiculous, obviously not profitable. So I would imagine Cathie buys today, but I don't know if there's any other sectors that are going to be buying with her. Right now, she's the largest shareholder. And I mean, is DNA under $1 a good deal? Honestly, I can't say it is. I really can't. Now, it probably is long-term if the company executes, but you got to really hope the company figures out their business model effectively. Right now, they don't have that many cell bio programs that are actually working to create real drugs that are generating revenue for them. Like the idea is working, revenue is not necessarily working. Their biosecurity revenue went to zero after the pandemic ended in 2020. So conveniently, they went public in 2021. So they showed off some really good numbers. So I don't think it's a good deal under $1 yet, especially if the insider selling doesn't stop. But if they execute over the next couple of years, maybe I'm wrong, and maybe DNA continues to do well. And penny stocks are very risky. In this market, there's so many good deals. Betting on a penny stock to me is not the biggest thing. Okay, so here are the earnings we're looking at this week. The big 5 that I'm looking at are Netflix, Taiwan Semi, Charles Schwab. Why am I interested in Charles Schwab? Well, because I started getting interested into Robinhood, and I'm actually curious how Schwab performs in terms of their assets under custody and their active users, because I think it creates a little bit of a proxy to understand how Robinhood's growth is going to happen. So I'm interested in those guys now. Goldman Sachs, they crushed today, so that was great. And other companies are Bank of America, that's an important one. United Airlines, I want to see if travel demand is getting back to good like it was with Delta last week. Delta had a really good earnings. They're up 15% year to date. And then Skillsoft, I don't know if people know Skillsoft. It's a really small ed tech company, and like they sell online courses and stuff. And I'm just curious to see how they're growing. They're not profitable, don't have a position, but I am curious to see how they're growing. TSMC, that's going to be a big one. Netflix is going to be a big one. Interactive Broker is going to be a big one as well. Johnson & Johnson, Morgan Stanley, P&G, American Express. So it's a big week of earnings, and we're going to see how these companies play out. But those are the ones that I want to see. Schwab is already out. Oh, wow. I forgot. Schwab is on Monday. How did I not know? Schwab is already out. Okay, so let's pull that up. Let's look at Schwab. Where's their stock right now? Okay, so let's look at the stock. Schwab is up 4%. Okay, that's good. You want to see, there you go. Yeah, here it is. Oh, wow. This looks pretty good. So let's look at it at a high level. Schwab, here we go. 96 billion in new assets. To give you context, Robinhood brings in like 4 to 5 billion, right? So like Robinhood is much smaller. 2024 net revenues of 4.7 billion, quarter-over-quarter increase of 6%, not bad. Net income 1.4 billion. This is pretty incredible, dude. They brought in about 5 billion, profits 1.5 billion. I mean, just incredible earnings for these guys. Excluding 140 million of pre-tax related costs, net income is up 1.55 billion and up 74 cents respectively. What are their total assets? Wow, look at this. Assets were 8.8 trillion last quarter, 9.12 trillion. 9.12 trillion. For context, Robinhood has maybe not even a couple, 110 billion of assets under custody. So, this is why I get excited about Robinhood. If Schwab is 9.12 trillion, if Robinhood can get even a small percentage of that to come to their platform, Schwab's market cap at 135 billion, Robinhood at 16 billion. I mean, there's a lot of room for growth there. Active brokerage accounts increased 3% year over year at 35.3 million. So they're growing users and they're growing assets under custody. Trading volumes are up 15%. Margin balances are up 9%. Not bad at all for Schwab. Really, really good stuff for Schwab. So nice stuff. Nice stuff for Schwab. They're up 4% right now. They're up 4%. It's going to be very hard for Robinhood to take market share from Schwab. They're just such a big company, $133 billion market cap, but they don't need to take a lot of market share. They just need to get a little bit. And I think they can be good. Robinhood 1820, S&P 514, Palantir 2297, just below 23. Tesla falling now. So that layoff news, not the best for Tesla, I guess. Market's not interpreting it as super bullish right now. That's down. Tesla getting a little bit of a hit. Dogecoin is up a little bit. Bitcoin is up a little bit. Google 159. And then NVIDIA, how's NVIDIA doing? NVIDIA right here, 896. NVIDIA looks like it's trying to get back up to that $900 level, which is going to be very interesting to see if it happens, if it can continue to get to those levels. I'm looking to the Tesla execs leaving. Rumors on X. Is any of that valid? Someone said Rohan Patel is leaving and I'm not buying it. Okay, so the rumors are definitely true. I don't know if it's Rohan Patel, but let's just say somehow I know that the rumors are true. You have various sources in this industry. When you become a journalist, which is what I'm a YouTuber or a journalist, or am I both? I don't know. But yeah, there are some high-level people that are leaving Tesla. That is true. I don't know if it's Rohan Patel, but I've heard that high-level people are absolutely leaving Tesla, and there's some major people leaving. And I think throughout the week, or even today, we're going to find out who those people are. And we will get to know. Now, is that bearish on the stock? I don't think so. I don't think that's bearish on the stock. But it does mean that, there's a little bit of a restructuring that's going on right here. Tesla Cybertruck recall. Okay, Cybertruck recall. Let's Google that. Why is there a Cybertruck recall happening? Tesla halts Cybertruck recall deliveries due to unexpected delay. June is saying there's something with the pedals. Interesting. Yeah, right here. One owner posted a TikTok showing that due to a problem with excessive lubricant on the accelerator pedal. I know something about excessive lubricant. Interesting. The cover can loosen and slide toward the front, jamming into a gap in the floorboard. That effectively caused the accelerator to fully engage, creating an obvious dangerous situation. However, Tesla's not confirmed the exact reason for the delay or the recall. Okay, so I think here's the video right here. So let's look at this.
As I'm driving, this slid up and wedged itself just like that.
I'm going to go to the actual video. Hold on. Here we go. All right, here it is. Here's the actual video.
So apparently the Cybertruck has a stop zone, and I might know why. It's got something to do with the accelerator pedal. So let me show you something interesting about my Cybertruck. Is that pedal looks different, right? It's missing this. So a couple days ago, I'm driving, and let's see if I can get a good view here. I'm driving, and this goes here. As I'm driving, this slid up and wedged itself just like that. Right now it's not clipped on, so it's kind of hard to see, but this wedged itself right there. And as you can see, based on the design of the floorboard, this sliding up, and the way this was still hooked onto the pedal, it held the accelerator down 100%, full throttle. Now, I was luckily had a clear mind, didn't panic, and holding the brake down overrides the pedal. So I was able to stop the car, but anytime I lift the brake, it would start accelerating again.
That is kind of scary, dude.
So I stopped the car, put it in park, got out. At first I thought the pedal was broken, but then I realized that nope, this was wedged down here under this little section here, not allowing this pedal to come back up. So yeah, looks like there's a recall or some kind of stop cell.
Wow, dude. Yeah, there's a recall today. So Tesla announced this today. We have just been informed of an unexpected delay regarding the preparation of your vehicle. We need to cancel your delivery appointment. That's why the stock might be down, dude. That's why the stock might be down. We apologize. Dude, that's not going to help deliveries. Oh my God. That's not going to help deliveries. That's why Elon laid off 10% of the staff, dude. Elon knew about this over the weekend. He was like, fuck, dude. Let's get rid of all these fucking workers that can't put on the brakes or the pedals correctly. Nvidia right here, $899. That's not good for deliveries, man. Tesla right here, $165, down 3% on the day. If they have to delay Cybertrucks, Elon already said 6 months ago that Cybertrucks are not going to be free cash flow positive for 18 months. So we got 12 months left until they become free cash flow positive. If they have to delay the shipment because of this pedal issue, which hopefully is not the biggest quality control issue, but if they have to do some recalls and fix this, I mean, that's not going to be good. And if we get more videos of Tesla owners saying, hey, this is happening to them, which this is the first video I've seen. I mean, I've never heard of this Cybertruck issue until this morning. That's not going to be good. That's not good. Now, maybe it was just a select amount of Cybertrucks in one area that guy lives in, and maybe that's the extent of the issue. But we'll see. We'll see how that plays out. That is not good for Tesla. That's bad. Yeah. Down 3% today makes sense. If they think Cybertruck's going to take, I mean, this is just more bad news and bad news and bad news. So FSD is not going to save this right now. Layoffs are not going to save this right now. It's just over the past week, just more and more bad news has been happening for Tesla. Benny says, hey, can you explain why Tesla isn't, why it's bearish for Tesla to cut jobs, but last year it was good for every other company to cut jobs? The reason for that is because when Meta was cutting jobs, their PE was at 6 to 10. Tesla's a PE of 40. So it's not like cutting costs, which is what happens when you cut jobs, are going to dramatically increase EPS. Like Meta literally financially engineered the crap out of their EPS because they got rid of so many employees, and obviously they became more efficient when you just don't have that much like fat on the table. And then boom, you know, the earnings were able to skyrocket. Tesla's not in that position. Deliveries are down. Deliveries are not going to get to 531,000 cars a quarter, which would be needed to get to a 10% CAGR. And the PE is already pretty high, which is what the bears have been arguing for why it still has more room to go down. So it's not like layoffs are necessarily going to increase earnings per share that dramatically, especially if your profits don't go up. You can only decrease costs that much until your EPS continues to go down, right? So definitely not the most bullish thing for Tesla if EPS doesn't dramatically increase. Avi, who is in Israel, says, here's an update from someone who is in Israel. Our government canceled all restrictions, but told us to be prepared for any changes. I'm assuming you're talking about restrictions when it comes to flying in airlines as well, Avi. So thank you for the update. Okay. So it seems like Israel thinks that things are a little bit safer to start allowing citizens to move freely across the country, but they should be prepared for any change that may happen over the coming days. And so far, Avi, let me know what you're hearing on the ground. What we're hearing is Netanyahu saying he's not going to attack. Is that what you're hearing from Israeli media? Is Netanyahu actually saying he's not going to retaliate? Because right now, that's what at least American media is reporting, that he's not going to strike back at least in the coming 48 hours. Nvidia 902 back over 900, dude. Iran attacks Israel. CPI is super hot. PPI is relatively hot. Oil prices as high as they've been since November 2023, and investors can't get enough of freaking Nvidia. I don't think this train is stopping, dude. I just like, it just doesn't seem like this train is stopping. And if Nvidia goes up, there's a good chance that TSM is going to go up, as it's up 2% on the day. There's a good chance SMCI is, like, there's a good chance all these companies are interwoven with each other, and they're going to do well. And they are going to do well. Avi says Netanyahu is demanding sanctions on Iran. Okay, I think that's fair. Now, see, the problem here is that the U.S. can't sanction Iran oil today because oil prices are too high, and they're starting to come down a little bit this morning. Oil prices are down. So although Netanyahu wants sanctions on Iran, I don't think Biden's going to give it to him. As you can see right here, oil prices down 1%, because if we can get oil back to 75 before Biden gets elected, I mean, that's probably Biden's number one agenda, to get oil to really come down, because that means rate cuts are going to cut. Like all of this cascades from Biden being able to have, or at least manufacture, a good economy. And sanctioning Iran right now is not going to help do that. It's going to be interesting to see how this plays out. Okay, let's talk about MKBHD's review over the weekend. This was pretty intense, too. I don't know if you guys watched it, but the Humane AI pin, he called the worst tech product ever. I mean, that is, this video now I'm looking at has 2 million views. To be able to say this is the worst product ever is just, it's a big deal, dude. It's a big deal. So I've been on record saying I think these AI wearables are full of shit. I don't think they're interesting at all. My bearishness also extends to the Apple Vision Pro. A lot of people got a little triggered in the comments yesterday on Twitter. I said the Apple Vision Pro is useless, and it's not. It doesn't matter. It just doesn't matter. Most people think the Gen 2, Gen 3 is what's going to increase adoption. I think they're wrong. And if I'm wrong, I'll eat my words in a couple years, but I think the Vision Pro is useless. I don't think anyone's ever going to use it. I think the use cases for gaming are okay. The Meta Quest is probably better at gaming. I think even if they make it $1,500, people are not going to actively buy it and use it every day. And I don't think Gen 2 or Gen 3 are going to change that. I think our fascination with AI wearables is dumb. I think the smartphone does everything, which I was so happy in the review. Marquez basically said the iPhone does everything you need it to do, so you don't need this product. And as a result of that, I think Apple stock will be fine if they focus on AI and generative AI, but I don't think the Vision Pro is going to be the basis for how they ultimately extend to use it. Here's a little bit of the product for those that haven't seen it. Let's watch a minute of this. This is what that product is, just to give you guys an understanding of it, and why when I saw it introduced for the first time, I really did not think it was that useful.
Today is Sunday, March 17th, and we're here because we have 3 things to share with you. The first is an update on shipping. The second is an overview of AI Pin, hardware and software that's shipping to our customers. So let's get started. I'm going to start by asking my Pin about something I asked it to remember for me. What time is my flight to New York? You can ask your Pin to remember your schedule, make lists, take notes, really anything.
Your flight to New York is at 1 p.m.
Who's going to do that, dude? Who in their right mind, that's the demo. That's all you need to see. Like, I'll show you a little bit more, but who's actually going to wear something, tap their nipple and be like, hey, what time is my flight to New York? By the way, you know why she was talking in between the answer is because there's a big delay, because it goes up to the internet. It goes to the cloud to use GPT and try to give you an answer. Like, come on, bro. This thing is $700. Like, this is just insane. This company raised $70 million. It's another hype startup that raised money. It just does not make sense to me.
There's this ice cream shop in New York that makes everything out of bananas. What's it called? Anything that you would search the web for or even use ChatGPT for, you can use on your Pin.
Makes everything out of bananas is called Morgenstern's Bananas.
Where is it located? You can ask follow-up questions and use your Pin to help you navigate the world.
Bananas is located at 2 Rivington Street, New York.
First of all, who's going to remember that address? Second of all, if you just Googled it, you would get the address, the location, the reviews in milliseconds, even if you were on a crappy Wi-Fi. It just does not make sense to me. But for some reason, the market is thinking that AI wearables have a market, and I just don't think that's the case. We'll watch just a little bit more of it, and then we'll move on.
New York 10002.
Very cool. I also remember Freddie sent me something. Freddie sent me a message about the MoMA. What was it? This will search my messages and help me recall information really easily.
Freddie said, say hello to Paula Antonelli, Senior Curator of Architecture and Design at the MoMA. She's an inspiration and a mentor.
Very cool. I'm now going to show you how to use notes to remember your preferences so that it can offer better recommendations.
I mean, dude, come on, dude. Come on, bro. Come on, bro. Like, that's how are we actually thinking that's a real thing? Someone says, what about Meta's Ray-Bans? Those are stupid too. Meta's Ray-Bans are stupid. Apple Vision Pro is stupid. Google Glasses were stupid. All of this stuff, and I will eat my words in 2 years. As this is what you do as a content creator. You put your opinion out there, and if you're wrong, you're wrong. I do not think there is a mass 3 billion user market for any of these wearable devices. I think the phone is good enough. I really do. And I think the necessity for us to be able to interact via an audio interface using NLP is just like us forcing a new product into the market versus there actually being a use case for that product. Like applications on your phone and touching them are the easiest way to interact with the market. And if you want to talk to your phone, you can talk. If you really want to hear some bot talk to you, you can talk to ChatGPT. You can talk to the app. Like, it's just like, I just don't see the use case for it. Someone also said edge computing is going to have to become very, very strong in order for this to work. I also agree. Edge computing is going to have to become very, like the batteries on edge computing and all of the software architecture needed to get answers in real time, which is what iPhone 16 might be built upon. That needs to be really important or really sophisticated before any of this actually gets super exciting as well. And so at least Ray-Bans are cool looking. Yes, that's correct. At least Ray-Bans are cool looking. Look, I know I'm on an island with this take when it comes to the Apple Vision Pro, and I've had this take for a few months now. Taiwan semi up 2% right now. NVIDIA 905. But I'll be on the island if I have to, and I will eat my words if I have to. I do not think future generations of the Vision Pro are going to be that exciting. And I know a lot of people said, oh, well, you're doubting technology. And so many people wrote these articles in 2006 about the iPhone not working, yada, yada. I'm like, yeah, but those people didn't understand how the use cases for the iPhone would evolve. I do not see the use cases for the Apple Vision Pro for the average person. I see it in healthcare. That's a sort of, a niche use case. I see it in gaming. That is also a niche use case. In terms of billions of people replacing their phone with a headset, I don't see it. And I'll be wrong if I'm wrong, but I don't see it. I don't think people want to do it. Even if they make it super cheap and light, I don't think it's going to happen. And we've seen this with the return rate. People, I'm curious if Apple reports, they probably won't, but how many people have returned it? People have returned this shit. I've talked to a decent number of people that bought the Vision Pro saying that they just can't use it anymore because it hurts their eyes. So it's hard for me to imagine that that thing is going to become super, super important and it's going to replace the phone, which means Apple's going to have to find a different growth curve. That's why we saw Apple say, hey, we're looking into robots. Why are they looking into robots? They're looking into robots because I think they're recognizing if the car was not going to be a growth curve and the Vision Pro might not be a growth curve, then they need to find something else that sticks. And right now, it might end up being robots outside of anything else that they have going on right now. Amit, I think you're just stuck in the BlackBerry era. It'll hit you before you know it, and tech will advance once again. Again, when everyone says this, they never give a reason. Everyone just says you're making a BlackBerry argument in 2006. Sure, I am. But the problem is no one's giving the warrant for why I'll be wrong. Everyone's just saying you're wrong versus saying why you're wrong. And so if that's the case, we'll look back at it in 2 years. I do not think Vision Pro is going to be as big as people think. Michael Schaefer says, yes, the Apple Vision Pro hurts my eyes after 10 minutes. I would return it at this point if I could, but I can't. It's hard, dude. It's hard for me to imagine that it makes a lot of sense. All right, let's get an update on rate cuts by Mohammed El Iran. See his perspective on where rate cuts are going and if they're coming in July, September, October, 2075. When the hell are we getting these rate cuts?
Joining us now, Mohammed El Iran is Chief Economic Advisor at Allianz and President of Queens College at Cambridge University. It's great to have you here, Mohammed.
Wonderful to be here. Thanks for having me.
We see the markets sort of unclenching a little bit. I mean, obviously, part of Friday's decline seemed to be anticipation of what might happen in terms of this anticipated attack that did come to fruition. But then, of course, doesn't seem to necessarily be carrying through to animate today's market.
Someone says Drew left Tesla confirmed. Okay, excuse my ignorance, but who is Drew? I'm sorry. I don't know. So put in the chat, who the heck is this Drew guy? And then we'll talk about it.
Market action. So what are we left with? Bond yields going back toward their highs of last week. We're repricing what the Fed might do. We've had to digest these hotter than expected inflation numbers. What's the thing you're most focused on?
So first, I think it's fascinating that the market has concluded a fact and a hypothesis. The fact is that the damage over the weekend was contained. The hypothesis is that there will be no further escalation. That is very different from what the national security people are telling you and us in terms of we've crossed a new line, it's the new Middle East. So I think the market is willing to put that aside and be comforted by three things. One is that we will continue to see productivity enhancing innovations advance. Two is that the Fed at the end of the day will be accommodating to markets. And three is that soft landing is the most likely baseline. And it's a good thing for the marketplace in the short term to have those three things, but we should listen to the national security people because I do think things have changed in the Middle East.
You mentioned those three things. They certainly are underlying the premise of where the markets have gotten to this year. Now, of course, I'm looking at the S&P 500. It's only picking up a third of what was lost on Friday. We are still a few percent below our highs. It seems as if the outlook has become a little bit less clean, at least, even from a macro perspective, given the way people are wondering if the Fed is going to kind of get itself into a corner here and not get through the easing that it wants to?
So we've been pricing in something that we've discussed for a while, and that I have felt for a while, is that inflation is going to prove sticky, that the last mile is really complicated, and that we're not sure what the Fed's reaction function is. If the Fed remains data dependent, then the Fed will be more hawkish than it needs to be, and that the market expects it to be. If, however, the Fed looks forward, and to use Steve Leisman's phrase, embraces more of an inflation framework and model, then it will deliver on the 2 cuts this year. So the marketplace is having to price in this reality that inflation is sticky.
But I'm still unclear where you are.
So I am hoping that the Fed will be less data dependent. I am hoping that they will look forward, realize that the economy is weakening, and deliver on 2 cuts starting as early as July. That is what I'm hoping.
But then if the Fed does do those 2 cuts and inflation has been stickier and does come back with a vengeance, wouldn't that be wouldn't people blame the Fed for acting too prematurely? Is that in their minds at all?
So the key issue you've said, come back with a vengeance. So my macro model, my macro paradigm is we are living in a world of insufficiently flexible supply side, very different from the world we lived in after the global financial crisis where there was enough demand. That insufficiently flexible supply calls for a slightly higher inflation target. The Fed cannot declare a higher inflation target because it missed so long and by so much. So what we're going to do is we're going to see this phrase longer term come in before they talk about the inflation target, and we will settle at an inflation at around 3%. And I suspect it is stable. I suspect it doesn't de-anchor inflation expectation.
So Mohammed El Iran says, hey, we're going to get inflation at 3%. It's going to move up from 2%, but we'll still get cuts towards the end of the year. Maybe. I think Mohammed El Iran over the past couple of years has been a little bit more bearish on inflation coming down, and inflation has come down aggressively. I still think we get to like 2.5 by the end of the year. I think that does happen on headline. Maybe I'm wrong, but I do think the Fed is looking at a lot of lagging data. And if shelter and oil comes down, we should see 2.5 and we should get at least 1 rate cut. So we'll see how that plays out. But that is what Mohammed El Iran believes. Okay, so Tesla, really important stuff right now. Bloomberg is reporting that this is why I pay for this Bloomberg subscription, so I can read these articles and bring this news to you guys, even though I sign up with a new email every couple months, so I get the $2 per month deal because you know I'm cheap. 2 of Tesla's top executives have left the car maker in the midst of its latest round of job cuts. Senior Vice President Drew Baglino resigned from the company, according to one of the people who asked not to be identified because the information is private. He's been one of just 4 named executive officers at Tesla, leading engineering and technology developments for its batteries. The 18-year company veteran who co-hosted earnings calls and shared the stage with Elon at multiple events is leaving along with Rohan Patel, Tesla's vice president of public policy and business development. Wow. That's another reason the stock is down. Tesla right now, yeah, down 3%, still down 3%. The shakeup coincides with Musk announcing the decision to cut headcount by more than 10% of workers globally. The CEO lost another top deputy in August when Zachary Kirkhorn stepped down as CFO. Did Elon confirm this? Did Elon say anything? Let's go to Elon. Elon has not tweeted about this yet. Yeah, Elon's tweeting memes right now. Elon's dude, what is this meme, dude? What is Elon tweeting right now? This is kind of ridiculous, dude. Oh my god, this Elon, this is actually insane, dude. This is the $200 billion guy tweeting this. This is hilarious. But yeah, so apparently some big people are leaving. Do you think this is bullish or bearish? What do you guys think? Bullish or bearish? It kind of feels bearish to me. I'm not going to lie. I don't know why these people are leaving. I mean, maybe they're bored. Drew's been here for 18 years, right? Maybe he's just bored. Oh, Drew Baglino tweeted. Okay, let's go to him. Drew Baglino. So he says, I made the difficult decision to move on from Tesla after 18 years yesterday. I'm so thankful to have worked with people. I loved tackling nearly every problem we solved as a team. I will always have a warm spot for the people of Tesla. A reminder to all of us to set higher expectations, I guess. What? That's a really interesting way to end the tweet. You guys think he left because he wanted to leave, or he left for some another reason? Whenever executives leave, it's really weird, dude. Like, I mean, I wonder how much this guy's worth. Drew Baglino. I wonder how much he's worth. This is the guy. He's got to be worth like tens of millions, right? There's no way you're at Tesla for 18 years and you're not sitting on at least maybe $100 million, right? Looking forward, I have no concrete plans, but as people know, I have difficulty sitting still. Yeah, this guy's probably starting another company. That's what it looks like. He sold $2 million of Tesla stock 2 weeks ago. Oh, wow. There you go. There you go. 30 million. That's his net worth, 30 million bucks. He probably has a ton of Tesla stock still, and that he's going to just like sit there for a while. Okay, so he's gone. Drew is gone. And Rohan Patel, who's this guy? Rohan Patel. Let's see. Rohan Patel, Tesla. Did he tweet? Oh, I think that's the guy. Yeah, this guy right here. Tesla policy and biz dev. Did he tweet? He has not tweeted yet. He's not tweeted. Wow, that's so weird. He was tweeting about FSD 2 days ago. 2 days ago. Wow. Interesting stuff, man. Interesting stuff. Definitely not bullish for Tesla, I would say. I mean, those are two senior executives that shouldn't be leaving. Someone said Bay says that's Chris's cousin. Chris's cousin would never work at Tesla. Chris is too bearish on Tesla for his cousins to work there. Robin, oh God, why are we down below $18? Well, here we go. We're under 18. Market's dipping a little bit. Where's S&P? Is S&P dipping also? Yeah, Nvidia's dipping. S&P 512. Okay, so S&P falling from 515. Market's taking a little bit of a haircut right now. DJT, he issued 21 million shares. He's down 15%. SoFi 730, PayPal 64, Amazon 187, Google 158, Palantir's down as well. Yep, market's taking a little bit of a tumble. Not as hard as we thought it would be. That's what she said as well. On Friday, I mean, we thought, I thought Palantir might be below $22. I thought it would be, because it ended on Friday, $22.20. So I was like, all right, it's got 20 cents left between that and $21. But not as bad. Not as bad right now. Look at Rohan's pinned tweet. What is Rohan's pinned tweet? It's about the Gigafactory. That's what it's not about layoffs yet. That's not what I'm looking at right now. Yeah, it's nothing about layoffs. Yeah, I don't think it's about. I don't think it's anything different right now. Maybe their job is done. Nothing important left to solve for energy or powertrain. Just a matter of scaling now. Yeah, but still, dude, it's weird to see executives leave. Like if Palantir's CFO left right now, it would be weird. I don't care how long they've been at the company. It's always weird when an executive leaves, unless it's obvious that they were going to leave. Like the Snowflake dude leaving was, no one expected that dude. That shit was, the entire market was blindsided by that. Snowflake down 4% on the day. It's just nice to see Palantir's not getting schmacked, even though Snowflake's getting schmacked. Like on a day Snowflake would be down 4% a year ago, Palantir would be down like 7%. Like there was such a weird dichotomy between Snowflake and Palantir. Now they're inverse. Now Snowflake can be down, and maybe some of that money is coming right here into Palantir. Neo's below 4. Oh boy. Oh boy, oh boy, oh boy. Oh, we need to track another stock now, guys. We need to track another stock. So if you guys saw the series I did with TJ on Friday, he's giving me $100,000 of real money, and I am allocating his 100 grand out of his like $5 million portfolio. So small part of his portfolio, but still a decent amount, into the wheel, because I want to become a wheeler by the end of this year. Hopefully I have some capital that I can start wheeling with. And so he's letting me kind of try it out on his channel. And it was a really good episode if you didn't watch it. So we have to track Shopify now, because Shopify at 69, we sold, I think, $64 strike puts, 5 of them, for May 10th, which is a day after their earnings. So if Shopify gets to $64, we have to take ownership of 500 shares. If not, we keep about, let me do the math, $12.50 we got in premium, $12.50 divided by 32,500. We keep about 3.8% in premium over 26 days. So we either get a 4% premium, or we have to take ownership of 500 shares. So we got to see how Shopify performs over the coming weeks as well. Why did I pick Shopify? Honestly, his requirements were no dividend. He wants a stock that's not up year to date, and he wants a stock with a moat. And I asked this question on Twitter. Let me know what you guys think in the chat. What do you think is a company that is attractively priced right now that you don't have a position in, but also has a moat. I don't know if Shopify is the most attractively priced. I didn't do a huge deep dive into their financials, but they're down 10% year to date. And that was enough for me to at least be like, okay, at least this company's not up a lot. So we're not wheeling on a stock that's, technically due for a little bit of a pullback. Maybe it still will pull back, but I picked Shopify. I think there's a big moat. I think it's definitely down year to date, and I don't have a position in it, and I think it's attractively priced. Their Black Friday numbers in 2023 were up 14% year over year, just incredible growth. And I don't think anyone's competing with Shopify outside of Amazon. Like, yes, there's small businesses on Amazon, but they're not the same sort of data analytics platform that Shopify is for back-end infrastructure that also gives you a storefront that gives you an independent business. The only benefit to Amazon is they do your shipping and they give you traffic. But based on the fees Amazon has after they take their traffic fee and their Amazon FBA shipping fee, you're not left with that much of a margin. So I do think Shopify is a pretty decent company. I don't have a position in it yet, but we're going to be wheeling Shopify over the coming weeks. Unity, I don't know, dude. Unity's management scares me, dude. And Unity's, do you guys remember Unity's guidance, right? The market wanted 2.2 billion. Unity said they're going to do 1.7 billion, 500 million less than what the market expected. So Unity, I don't know. The financials on Unity and the stock-based compensation is stupid on Unity. It's disgusting. TMDX, this is a good one. I've heard this name a lot. I haven't done a deep dive, but these guys are very interesting. So that one maybe is not the worst one. He's already wheeling Tesla. I couldn't wheel a company he's already wheeling. He's already wheeling Enphase, Tesla, Palantir, SoFi, PayPal, and Riot. So I couldn't pick any of those. And Amazon and Google. So I couldn't do those. Intel and Starbucks. The problem with those two companies is they have a dividend. And when you're doing the wheel strategy, the dividend can get a little iffy sometimes. So that's why I didn't look into those. Is the Shop app Shopify? Correct. The Shop app is Shopify. And Shopify has partnerships with Kylie Jenner, Mr. Beast. I mean, like, the brand awareness these guys have is just incredible. Now, I don't think that's enough of a reason to make a huge position in it. But I do think if you're just thinking like, hey, can I wheel this stock? I think, yeah, it's not like, it's not the craziest idea that if you have to take ownership of 500 shares of Shopify in the low 60s, that you're screwed, right? Sort of the philosophy there is if you have to buy 500 shares, A, can you sell covered calls against it? B, would you be okay with increasing that position? And if you are, then the company shouldn't be in the worst position to do the wheel on. Adam says selling cash secured puts on MicroStrategy can be very risky, but if the downturn is over, that will print as it keeps going up. It's very risky, but there's crazy premium. Yeah, that is true. It's the same thing with Coinbase. The premiums on Coinbase. I was talking to a guy over the weekend. I actually had a meeting with a guy who sells options pretty aggressively, and we were just talking about like strategies. And he's been selling options on Tesla and Coinbase. And because Tesla is so volatile, the premium has been great. And because Coinbase is even more volatile because of Bitcoin tanks, Coinbase tanks, it's even better. So he's averaging like 5% a month, or 5 to 8% a month of premium, which is not easy to do. Like anyone who tells you to do 5 to 8% on premium, they're usually bullshitting. But because he's deploying aggressively against Coinbase and Tesla, you're able to generate those premiums. Realistically, if you can get 1% a month, maybe 1.5%, that's pretty decent. And if you're very experienced, going for 3%, I don't think is crazy. But if you're brand new to option selling, what I've learned is if you can maybe get 1% a month, you're doing okay. But if you can get 4 to 5%, it's because you're being a little bit more risky with it and you know how to roll effectively. So though MicroStrategy and Coinbase can offer good premiums, they're just a lot more risky. S&P right now, 513. S&P taking a tumble. Tesla 165. S&P still green on the day, but it's down. Palantir 2264. Where's Robinhood? Robinhood 1795, right at that $17.90 to $18 range. CleanSpark's up about 2%. Bitcoin 65,000. Bitcoin's down from 66.4 to 65, down about 700 points. The crypto stocks, yeah, CleanSpark's up, but everything else is down. MicroStrategy is down, Hut 8's down, Marathon's down, Riot's down, Coinbase is down as well. Any thoughts on Riot? I don't have a lot of thoughts on Riot. I know they're a Bitcoin miner. I haven't looked into them that deeply, but I mean, look, a lot of these guys go up if Bitcoin goes. It's really that simple. I think the halving event is going to be exciting for Bitcoin, dude. I think the ETF inflows are going to create a supply shock. I do think that thesis plays out. If Hong Kong actually approves these Bitcoin ETFs, it's going to get even more exciting. So I think if you're bullish on any of the miners or the Coinbases or Robinhoods of the world, the catalyst is Bitcoin. At the end of the day, we can dissect the company financials to the till the end of time, but Bitcoin is the core catalyst. It's like, I think at least 50 to 70% of the catalyst. So we all got to see how Bitcoin does now. We all have to see how Bitcoin does. I think it might be a sell the news event in the beginning as well, just like the ETFs. I think it might be a sell the news event in the beginning, but eventually I think it will kick in. 1% a month is 12% a year. That's about the same for the market. Yes. Now I say 1% conservatively because if you're brand new to it, that's why I said if you're new and you get 1%, that means you're not messing up. Most people that are new, they end up losing a ton of money, right? They pick the wrong strikes, all this stuff. Realistically, you should be able to get more than what the market does. Closer to 2-3%. But if you're brand new, I think 1% is not the hardest thing in the world to achieve. Adam says 1% is like 90% safe in your favor to make a month selling. You won't get assigned 90%. Yeah. So basically 1%, I don't want to say you're 90% likely to do 1% if you're brand new, but you have a good shot of getting 1% if you understand the basics. But you can be a lot more aggressive with this stuff when you get really good at it. And right now I'm just trying to understand the basics before I deploy a ton of capital at it. I just think it's honestly, dude, I've been reading a lot of forums over the weekend. I've been reading a lot of Reddit threads around option selling. It seems to be the most effective way to use your capital outside of buying and holding if you are bullish on a stock. Before you just buy it outright, unless it's just ridiculously undervalued, you sell some puts on it. And if you can do it in a semi-aggressive way and you know how to roll and then you're able to sell covered calls against it, I think it makes a lot of sense as a method to be able to gain entry into some of these positions. So we'll see. But I do like learning about it now. And now I'm getting addicted to like learning how it operates because there's so much to understand and there's so many different strategies people have that it is very interesting to see how it plays out. Okay, cool. So that's what we have. That's what we have right now. The market's dropping rapidly. Let's take a look at the market. Where are we at? S&P? S&P 512. Yeah, market's barely holding up. We have some nice red candles right there. Everything's taking a little bit of a tumble. I don't know. I don't think there's any crazy news that came out. Maybe the market's pricing in some of the stuff that happened over the weekend, even though you would think that stuff is priced. Oil prices right now, are these guys going up? Oil is still, wow. When I shared the screenshot in the morning, oil was down 0.85%. Oil is down almost 2% on the day, guys. That is great. Look at that. Look at that. That is great news. This is another reason why I think a lot of people are going to be buying the dip. I mean, if oil can continue to have this downfall over the next coming months, CPI is not going to be that rough, and markets should rally on a good CPI, even if it's in May and not in April. Robin at 1792, Raytheon and Lockheed are up a little bit. Bitcoin again falling. S&P is down. Where's the 10-year? Is the 10-year at 4.6? 10-year is at 4.65. Yeah, wow. 10-year is basically at 4.7. Last time we had a 10-year at this level was November 2023, and we had a nice correction November or end of October 2023. It's really interesting to see how the bond markets are selling off to get to this 10-year. I don't know if the equity markets can sustain their momentum if the bond market keeps signaling higher yields like this for longer. We're gonna have to keep an eye on that today. If that thing bumps up to 4.8, the equity market should take a bit of a hit. Should absolutely take a big of a hit if we see that happening. Ginkgo 97 cents right now. I am not buying the Ginkgo dip for those that are asking. I'm just not doing it. I just like, dude, in this state of the economy where there's so many good opportunities, but things have become, let's say, not necessarily cheap, just given the run we've had in Q1. I don't want to be allocating capital to a bio penny stock that Kathy Wood has. I love Kathy, but she's been buying this thing all the way on the way down, and no one's really buying it with her. That's the hard part. Like, she's like the sole institution that's really buying aggressively. And so that's why it's just not the most exciting. Let's look at Ginkgo's insider selling. How bad is their insider selling? How bad is it? Yeah, dude. It's definitely not. In the past 12 months, 14 million shares have been sold. I mean, and 1 million shares have been bought. Like, that's just, in the past 3 months, 129,000 shares have been sold. 0 have been bought. Just not the most exciting for that. Bayray says, good night. Glad I got to catch live. Good night, Bayray. Get some sleep. Thank you for being here today. Austin says, if the market doesn't correct and the 10-year goes to 4.8, does that mean this could be a new normal? Well, that's a good point. If the market does not correct, I'm happy you brought that up, and the 10-year is at 4.8, I think we would need a month of the market not correcting if the 10-year is at 4.8. Either the bear insane, or we have a new normal and the market is able to withstand 4.8% 10-year yields while keeping an S&P above 500. Because if you told me the 10 years at 4.8 a month ago, I would say the S&P is below 500, just like on raw intuition. The fact that money is still pumping up the markets versus going back down, versus it going straight into the 10-year is exciting. And it might be because some of those money market funds are coming into the market and they're not going into 10 years, even though, some people are selling those off. There's other avenues. This is why Tom Lee keeps saying there's money on the sidelines. That money on the sidelines eventually is going to have to make an entry. Like if the S&P, I would not be surprised if money markets decrease again this week, because on Friday, you probably had a lot of people call up their fund managers and say, hey, take out some of the money, put into the S&P. We finally got a dip that we were looking for, and like slowly DCA into it, which just makes it harder for the S&P to get down to that 4,800 level that a lot of the bears want to see it get to. Adam says, oh, he loves Kathy now. No, I've always loved Kathy. Okay, I've always been a Kathy fan. The only problem I've had with Kathy is her selling Palantir. That's the problem. That's the part I never enjoyed. But she got back in, so that was my only beef with Kathy, quite frankly. But she's back in. She's back in. She did an interview with Sham. I love Kathy. It's not that she follows me on Twitter now, but I love Kathy. I've always loved Kathy, and Kathy's team. If you're watching, interview, I love you. Let's talk on the channel one day. Just it's like you get Palantir, Robinhood. We have the same portfolio. I don't have some of your stocks, but I have some of the others. So, we can talk one day. Clean Spark 1536, down 3% or up 3%. Google 159. Robinhood trying to make a run back at $18 right here at $18, and Palantir trying to also get back to 23 right now. Palantir at 22.62 right now. Okay, that's what we got. Is there any other crazy breaking news happening today? I don't think there's anything. We talked about Iran, Tesla, oil prices, the Palantir deal. The breaking news on Tesla is that they're laying off 10% of people. Retail sales are up 0.7%. DJT is down 13% off dilution, about 21 million more shares. And again, the breaking news on Tesla, Rohan Patel and Drew Baglino are leaving, which is not good. Which is not good for Tesla. Or at least I don't think that's good for Tesla. I could be wrong. Maybe it's good that these guys are leaving, but it seems like these guys are leaving. What's the schedule for you and TJ? Every Friday, 12 p.m. So we'll be back on Friday and we'll check out how our positions. And he gave me 100 grand. He tied up 32 grand. So we have 70 grand left. So we'll see if we deploy it against another position. Amit, do you think there is anything Elon can do which will make people give up on him? His behavior is so erratic. I just don't understand why he is so supported. No, I think Elon, at the end of the day, Elon is the visionary of our lifetime. I think all of us, as much as you might hate his political, ramblings and his memes on Twitter, which I think actually makes him more human and makes him more likable in my opinion, but that's my perspective. It might be in the minority there. If the world did not have Elon Musk, the world would be worse off by orders of magnitudes. So I think it is very good that Elon is doing what he's doing. He is erratic, but at the end of the day, that's what, all crazy visionary CEO billionaires are erratic. Alex Karp is erratic, right? You got to be erratic when you're building companies that might take us to Mars one day, when you're transforming the world from ICE vehicles to EV vehicles. And so I know a lot of people think Elon is full of shit, but I do think Elon, even if he has some shit in him, like any human being does, he has accomplished more than any of us can imagine. And we should be cheering him on. We should be a proponent of him continuing to innovate, because if Elon's not going to do it, who's going to do it? Right? Who's the next Elon? I mean, when Elon passes away, we have to ask ourselves the question, who is the next Elon? And I don't see the next Elon around me. I don't see him in the media. I don't see someone managing SpaceX, Tesla, Neuralink. I mean, they're solving people's paralysis. I mean, come on, dude. You got to give him credit there. And that's why I'll always be a fan of Elon. But I don't think he can do that much to get people to stop supporting him at the end of the day, because he's a rock star. And I think a lot of people will continue to support him regardless of what happens. Can you create a playlist for you and TJ? It is. If you go to playlists on YouTube, there's a playlist right there. It's called Option Selling. It's already there. Now, granted, the moves that are happening in Tesla with the layoffs and the potential switch to robotaxis and the investors thinking the M2 was going to happen, now the M2 is not going to happen. Look, that is definitely not good for Tesla investors who had an expectation that something was going to happen. But the Tesla bulls that are spinning the narrative into the robotaxi becoming incredibly bullish for Tesla, and the pivot and the layoffs are leaning into the robotaxi. I think there's a bull case to be made there. I just don't know if the bull case is going to win out, given investors might be getting fed up. So we'll see over the coming weeks and the coming months after Q1 earnings what the market sentiment is. But I think at the end of the day, Elon's going to pull this off, even if it takes a few years for him to do it. Mitt wants an interview with Elon. No, dude, I've been pretty upfront for my whole career as a content creator that I've been a very big fan of Elon. The reason I don't have a big Tesla position is I missed the run up. I had Tesla stock in 2019 and I sold it too early because one of my friends told me I should take my profits even because I was up 50%. And I was like, oh yeah, you're right. Like I was just an idiot in 2019. But also most of my money went into Palantir when Tesla dipped aggressively back in 2023. So I picked Palantir over Tesla, which I don't think is the worst pick because I do think Palantir 10xing from this valuation or from that valuation was way more likely than Tesla 10xing. And at the end of the day, I'm in this for a big return. But I am always going to be a supporter of Elon, no matter what. I'm just too inspired by the guy, dude. I think it's hard if you're an entrepreneur or someone who like wants to do big things in the world to not be inspired by Elon. All right, I think we'll end it there. Let's do word of the day, and then I'll get you guys out of here. Big day for the markets. I'll see you guys back at 3:45, and we'll see what happens as the market plays out over the next few hours. Word of the day: remunerate.
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 Okay, so I just said remunerate. I said the U in front of the M before the M in front of the U. That's not that big of a deal. That's just me talking fast. So remunerate, to pay, recompense, or reward for hard work. Remunerate. I feel like I've seen this word before. After completing the project ahead of schedule, the company was quick to remunerate the team for their hard work. As a token of appreciation, the organization will remunerate all volunteers for their dedication and their commitment. I didn't even mess that one up, dude. I said remuna. Wait, what did I say?
Remunerate.
I said remunerate. So I said I said the U before the M basically versus the M before the U. That's not even that big of a deal. It doesn't even look like remunerate. It looks like remunerate to me. Whatever. It is what it is. It's a common word. It is a common word, but as you guys can see, I don't even know how to say most of these. You said remunerate. Yes, that's what I said. Thank you, Sanjay. I said remunerate. That was a bit more dyslexic than anything, dude. I put the N before the M. Is remunerate a word, dude? Let me see. Remunerate. Tell me this is a word. Damn it, it's not a word. Wait a second. Holy crap. It was a word. Oh my God, it was a word. Remunerate is an obsolete word that means to recount or count again. It is also a common misspelling for, let's forget the second sentence. The word remunerate comes from the word. Wait, why does it say it's an obsolete word? You can get rid of a word? Who decided it's an obsolete word, dude? I'm curious now. Who made the word extinct? Like, what overlords decided that this is not a word anymore? Like, that's incredible, dude. That's incredible. It's a math term, right? Yeah. See, I was watching The Matrix last night. This is what The Matrix does, dude. They'll fucking make you think there are words and then they'll take them out of existence. It's just, this is what we got to fight against. We got to fight against the machine. All right. Thank you, everybody, for being here. I'll see you at 3:45, and we'll keep going from there. Tesla, new Palantir deal. Iran, Israel. We'll see if there's updates there. Oil coming down 2%. Very nice to see that. Goldman Sachs had great earnings. Charles Schwab had great earnings. No big earnings after the bell. And Netflix, ASML, TSMC this week are going to be big earnings, and we'll keep going from there. Also, United, Blackstone, a bunch of these different companies. And we'll keep updated later throughout the week. All right. Thank you, everybody. I'll see you guys at 3:45 p.m. Bye, everyone. Have a good one. See you in a few hours.